We do want to talk more about Fed Chair Powell facing Congress and what that means for the markets. Joining us on set is Julia Coronado. She is the president and founder of Macro Policy Perspectives. Also with us, Ed Yardeni, who's the president of Yardeni Research. And Ed, you're going to be at a disadvantage because Julia's here, so she gets to jump on first right out the gate. Julia, let's talk a little bit about that. Powell's going to speak, and we can listen to what he says, but then we're going to have a lot of data points that come right after it.
Absolutely.
You've got the jobs number, you've got the CPE. Next week, we've got inflation numbers and the CPI and PPI.
Yes.
So how much weight does what he say carries at this point? And how quick and how transient are those words?
Exactly. That's a great point, and I think he's going to echo the strategy that they're following, which is data dependence, right? They don't think they're done. They think they have more to do, but the data are going to guide them. How representative of the economy is the January data? Do we get payback? How quickly does inflation moderate in the spring?
Is he going to say disinflation 79 times, and will it matter if he doesn't?
He probably won't, given some of the revisions we've gotten. You know, we've seen them adjust their language. We've seen them, you know, step into it and step back. And again, that's the zone we're going to be in this year. There's going to be a lot of ebbs and flows.
So is his goal to say as little as possible because we are at sort of a critical time, just an inflection point?
Well, I think, you know, for two reasons. He's speaking for the committee, not for himself. So he really has to represent the totality of the committee. So he's going to take a very even-handed tone and represent that entire committee. And then, yes, we're at a time where there's a lot of uncertainty. We've had some wild swings in the data, and their new strategy of proceeding methodically gives them time to gather multiple months of data before making that next decision. Obviously, the next decision is baked in, but the question is about the signal going forward. And they're going to have more information by then.
So, Ed, what does that mean for the markets and the market's response? We have seen the markets, soar in January and then swoon a little bit at this point. What are you expecting for March?
Again, that's going to be data dependent as well. But all in all, I think the market has held up remarkably well. We all know that Powell's going to speak and that he has taken a hawkish approach for quite some time. We also know that the markets are holding up well in the face of inflation news that turned out to be somewhat hotter than expected. But I think all in all, as you said, it's not going to be really all that important what he says today, unless it's something radically different, which is not very likely. What really matters is how the next batch of economic numbers play out. I'm in the camp that thinks that mild winter weather did in fact lead to a strength in payroll employment, retail sales, auto sales. The problem is February has been mild as well. So we'll see how the seasonals play that all out. So it's a big question mark at this point on how the data plays out. But all in all, I think the market probably just trades sideways for a while until there's more clarity on whether the Fed's just going to do 2 more and pause, or 3 more and pause, or just keep going.
Ed, you're somebody who probably looks at the earnings a little more closely, too, because you're not just doing this from a macro perspective.
Right.
When you're looking at the earnings, what are we hearing? We're about to go into a little bit of a lull period. What are you guessing for the second half of the year, even?
I think we're seeing a mid-cycle slowdown. I don't think we're seeing an earnings recession outright, but the earnings were down slightly, a little over 1% on a year-over-year basis during the fourth quarter. I kind of view what the economy has been doing is, I think that we've been in a recession all along here. I just call it a rolling recession that's been hitting different sectors of the economy at different times. And I think that's showing up in earnings. So we clearly have had and still have a housing recession. We've had a recession in the goods providing sector. Retailers got stuck with a lot of inventories. Technology companies hired too many people during the pandemic and now are letting some of them go. Commercial real estate is in trouble. And yet the overall economy is growing. And I would say that given that, the decline in earnings during the fourth quarter wasn't that big a deal. And I would think that on a year-over-year basis, the comparisons are going to start turning positive, if not in the first quarter, then the second quarter.